Let's head to Ghana now and tell you what's happening with the stock exchange. Seems pleasant at this time, at least at the opening. It opened the week on a strong footing with the benchmark, that's the GSE Composite Index, posting a 24.97% year-to-date return, signaling continued investor confidence in the local equities. The GSECL has begun trading at 6,109 points on the GSE Financial Stock Exchange, which tracks financial sector stocks, opened at 2,980 points, reflecting a 25.18 year-to-date gain. Trading activity has remained buoyant last week, with 3.39 million shares changing hands and a total market value of about 9 million Ghana Cedie. Let's talk about this and a whole lot more. Hope the good news is all over every sector of that economy. We'll find out from the financial and management experts. Mr. Ernest Owusu-Nyako joins us from Accra, Ghana. Thank you so much for joining us, Ernest, and good afternoon.
Thank you so much for having me in here, and have a good afternoon. And let me say Happy New Year to yourself.
Yeah, Happy New Year to you too. But so I mean, it seems happy on the stock exchange. Are we in for good days? Is this how it's been? We see gains year to day at the stock exchange.
Yeah, so on the stock exchange, we've actually seen that improvement as you are talking about. But I am not surprised because we saw in the last quarter, third quarter of 2024, the stock exchange recovered so massively. In transactions term, they did 230% year on year. And then that's give us a good signal that there's an increase in investor confidence in the stocks and the economy. So when I saw the performance as reported in recent times, I wasn't surprised. I think what comes to me with the GSE and its performance is that they are doing something good, and then which was reflected in the government's economic policy statements last week, when they actually want to position the Ghana Stock Exchange as a profit-making agenda rather than what we currently have. And there are plans to also make this year, they will now start moving from a guarantee base to a public limited company. So seeing this coming through, and surprisingly some investors in there and some stocks which were not doing well at the beginning of the year, 2022, 2023, when Ghana actually go through a lot of economic issues, came back so strong. And that is what we are actually seeing in some kind of stability for the first quarter already. And then just to also relate that to our economic policy statement, which is the budget that was given to us last year. And you also know that we have a new president. He and his team are actually trying to look on that, because we know that our debt stocks, both domestic and foreign, are going beyond bounds. And the minister caps it well to say that we want to only rely on our internal generated funds, specifically the treasury bills, to be able to service all those debts. So going in to have an agenda to service debts and seeing a stock exchange doing so great, it looks like it's a good news to us. We are only anticipating that all other initiatives that the Ghana Stock Exchange have outlined, which includes making it accessible for the customer to be able to trade on the stocks on the phone, which is something we all look out for this year. And also, they also want to get into the space where we can roll out a general credit bureau where people can actually have their credit ratings on their own and understand it. That's put together. I won't be surprised if we should record some much more improvement in the stock market come year end.
So do we see this positive sentiment spread to maybe the fixed income market and other instruments? Do we see this positive instrument, especially when you also look at foreign investments?
Yeah, so the impact we are seeing there surprisingly trickles down to all the other fixed income and all the other funds too. Just that I think the stock markets have taken that bold step and being the market lead in this investor space would give all other portfolios that are running the leverage to be able to bank on what the Ghana Stock Exchange is doing. Because when we get all that we need as economists or as finance people or as policymakers is to see that there is a positive outlook on our investment portfolios from the general public. If there is a boycott, which I don't anticipate any in the short term, then we can't be singing a different song now. So with the investors doing well, and you also know that when we are looking at the equity traded ones, they normally would have a lot of strings attached to them, which will make it very volatile. The other ones like the mutual funds and all the others, which are heavily regulated, would not have so much risk attached to them. So when the risky ones are doing well, we expect that those that have a balanced form of portfolio would also pick it up and then do exceptionally well. We were surprised to see most companies posting some very good dividend for their investors and shareholders in their finance reports that were shared. The reports are still coming in. I think all of them have up to the end of March to publish. So we sit and wait to see how much dividends are being declared. And we anticipate that half year would give us a much better outlook of what the government policy would interface with their own internal arrangements too.
Well, sounds interesting and good news, but I wonder if this overshadows the fear around, the debt restructuring. For instance, your Minister of Finance had said that the next 4 years, Ghana will have to pay $8.7 billion. That's about 10.9% of the GDP. The biggest will be 2027 and 2028. And we do know that you still have the marks of the debt restructuring from last year.
Yeah. So on the debt restructuring, which we would also want to include the domestic exchange program that was rolled out from 2022. We had 3 phases of it, which was too much a hit for citizens and the country to take. And looking at that 8.7, that is the foreign debt stock. When you look at the domestic one, we have 150 billion Ghana cedis to think about. Already, we have exhausted all the ceilings. So we've actually have treasury bills as the only option, which the finance minister stated so clearly in his policy statement. What is happening to the economy that gives us a bit more confidence is the fact that consistently from the beginning of the year, the government and the central bank have exceeded their auctions when it comes to the treasury bill. The last one that was held over the week, I saw some 6.22% increase over subscription. Now, when we get into that space, then what this government and its policymakers have successfully done is to reduce the rate on treasury bills from the 20% and 22% that we had some years back to an average of between 15 and 18%. So when we consistently will have that, then it means that the cost of debt to the government, to the domestic market is reducing, whilst the citizens and investors still have confidence in the fact that the government will deliver. And so we hope to see more of these oversubscriptions.
But because it's a normal thing when the yields or the rates are reduced, then isn't that a disincentive or discouragement to investors, to come into the market?
Okay, so ideally, and from theory, that is what should have happened. But for the past 3 years, when we saw those increments in rates as an incentive to get us to bring more cash, we realized that was not organic. So in some 18 months past, we were getting 24, 25, 26% on treasury bill rates. Because the government had gone into a domestic debt exchange and bondholders were not getting their monies and had to go through that restructuring, like you understand, and pushing people's monies and capitals into 15 years from the time they were expecting it was a big disincentive to the economy. And we were actually not getting the government to have a full subscription on treasury bills. which technically is a 0% rated in terms of risks. But then when we had to see what we are dealing with, that look, this is what we have to face, and we had a lot of demonstrations all over the place. Now, when you reduce it to 18 and 15, now we appreciate it as this is the reality, this is what we want. If you are giving me 25, 24%, and I stand the risk of not getting it when it is due, then that becomes a turn-off. We wouldn't come, and that explains why the government was not getting the full subscriptions in the last 18 and 15 months. But when the rates came down, now we have an appreciation of the fact that this is transparency, this is reality. So we would want to go in there. And again, what actually is increasing the subscription is the fact that the debts restructuring that happened around bondholders have not been reversed. So they are getting to see their payments happen when the time is due. So then it gives those who are not actually going into the bond structure the leverage and the comfort that if I should place my funds with the government, like I would explain to the layman, in the next 3 months, I'm sure to get the rate, even though small, but I have confidence in that. So that is the only explanation we can put to the oversubscription and the reduction of the rate.
And I guess most of the investors now are Ghanaians, right?
Yes, most of them are Ghanaians. The foreign investors, in the past, I think we had about some of them leaving the economy because of some of all of these things. But the ones that were partially owned, we are still having them, but largely are Ghanaian investors and largely retail investors, which contribute mostly to these Uber subscriptions.
All right, I know that when President Mahama was coming in, he did talk about, how he was going to reduce taxes, which would be against some of the agreement that Ghana already had with IMF. I wonder how that is playing out.
So I was also in anticipation like yourself, but last week when the budget statement was read, we saw some very bold decisions in there. What the government is focusing now is that, yes, those taxes have been revoked or abolished, as we would normally want to call it. There were lots of revocation. The 10% withholding tax on lottery winnings, and we probably call it the betting tax, has been abolished. The infamous e-levy, which was the taxes on electronic transactions, have also been cited to be abolished. We have emission tax, which comes up when you have a high emission equipment like a vehicle that's emits a lot of into the environment, also has been abolished. And then when it came to the COVID-related tax, those ones were wind into the structure of the VAT. So the government has asked that the World Bank helps give policy advice in how to take that one out. Now, my question to the government was, how are you going to get the difference in the shortfall? Already, what was coming into the health sector and other non-governmental organizations by way of USAID has been revoked for some time now. So what the government was doing is now cutting down some spending. And typical among them, the government mentions that to be able to meet some of those debts, funds that are supposed to be used for payments of contracts and procurement mandates are going to be audited. So the government talks about having a whole payroll audit for the public service and then having a review of all contracts that are due to understand those that are genuinely due to be paid. Aside that, the government has also cut some spending in the exports. And then if you can recall, the government or the President Mahama is talking about getting some agricultural growth in the space of, for instance, poultry, where the government cites that, look, for some time now we've been importing so much, so we cut that one. Believing the government to be able to cut some of those spendings. Already the government has been sized into half compared to the previous administration for now. if all these ones are coming through, and to say that, look, we can still rake in a lot from what we have, and not to forget that the labor union also agreed to a 10% increment, which was not what was expected, that they would do a 10%, because normally they would have pegged it against the current rate of inflation, which hovers around the 20s. Now, they say they want a 10%, which gives the government some more room to be able to use that anticipated increase in public sector salaries. That can also help. Then again, the government cuts down its administrators and government by almost a half. That is going to help. And then the only increments that we are also seeing, and also he has also revoked some tax exemptions that were given to some organizations and some people, especially in the ceramic industry. All of that is what we believe, if it is heeded to judiciously, would be able to cover up those gaps. Again, we have the next phase of the IMF review coming up ahead. So that is going to be able to inform us whether we'll be able to meet the IMF conditionalities with respect to revenue mobilization. And also, another thing that is going to give the government room to breathe is that some projects that were initiated by the previous government have been put on hold. For instance, the government talks about agenda, the 1D1F, which was to say that every district will have a factory. The government says we already have municipal district authorities or assemblies, let them handle that. The government is saying that we as a government are not going to focus so much on putting up factories across all the over 275 districts. Let's get the the private sector involved in that. So that doesn't become a government initiative again. So it will go off the government's book. Then you have initiatives that were supposed to bring stability after COVID. The government says COVID has been gone for years now, and we still cannot be referring to COVID as the reason for our predicament. So all those initiatives which seek to put a drag on our budget and our physical mandates as an economy would now be taken away. Now it leads us to our fate to be able to run from March to June and see how this plays out. If the government gives us an analysis and tells us that the e-levy was not so much a backbone for the economy, so taking it off is fine. Okay. Then that is okay, and all the other taxes.
Well, I guess that President Mahama had it all figured out before he made that promise, you know, and well, let's see, as you said, how much of those leakages will be plugged and how it's be redirected. Thank you.
Exactly. We like the energy that has come. I only anticipate it to be one that would continue. And you know where we find ourselves in the world. You shouldn't be too excited about some of these things.
Okay, well, let's be cautious. Let's be cautiously optimistic. Exactly. Thank you so much, Ernest.
The Ghanaian economy to always ask the questions as and when they feel it is necessary.
All right, Ernest Umusu-Wako, a financial and management expert in Accra, Ghana. Thank you so much for giving us so much details of what's going on in the economy there.
Thank you, Ini.